It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Wednesday evening, April the 6th, 2016. Another exciting newsletter in store for you guys tonight. We got crude, S&P, gold, and of course the euro in tonight's newsletter video. Boy, the oil and equity markets are running higher on all cylinders after a big drawdown in oil inventories this afternoon, while metals and currencies are sideways after today's FOMC meeting minutes pretty much put a bullseye on the month of April for the next rate hike. Crude is bullish with a spike in channel this evening, which tells us to look for buying opportunities after a pullback into the correction zone tomorrow. We actually have two spike in channels on the oil market. Boy, oh boy, those buyers just took that and never looked back. The E-mini S&P is following right on their heels. S&P is also bullish with a major bull channel that tells us to use channel rotation for the most reliable opportunities tomorrow. We'll get a spike in channel as well hidden inside that channel in the S&P. Going to be an interesting chart for the oil and S&P markets tonight. Gold is range bound with a bear bias this evening, and rotation tells us to look for selling opportunities after the buyers try to push it higher tomorrow. We're looking for a two-try rule and a collapse back down to finish a measured move on gold for tomorrow. The euro is still range bound this evening, multi-day range, and a recent test of the high tells us to look for a move back to the lows. Sellers will be waiting for the buyers to try one more time because we got some big clues on the euro chart that we're probably going to see one more shot back to those highs before we get a chance to sell this sucker right back down to the lows. Got a really good newsletter in store for you guys. Lots of learning and earning opportunities on the newsletter this week. Before we jump into our charts and take a look at what's happening for tomorrow, I do want to remind you the only place to watch the full-length version of this nightly newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching the video on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Remember, that YouTube video is only a small portion of the full-length version. Follow that link. Come join me over here at sidewaysmarkets.com for the full-length version. And while you're here, grab a free pass. Come out and join me in the trade room this week as a guest. Register for our mailing list in the lower left-hand corner. That way you'll never have to worry about missing another newsletter ever again. Just give me your name and your email address, and I'll shoot you an email every evening between about 7 o'clock and 8 o'clock Eastern Time when that newsletter is ready to be watched. Right below the video, how easy is this? You can download all the charts you see me using in tonight's video, have them on your computer for tomorrow. And then, of course, don't forget we have our trial membership. Sign up over on the right hand side. You can learn more about the different strategies that we trade here, what it feels like to be in our trade room, and everything that is being a member here at School of Trade. And of course, don't forget, I've always got someone standing by 24/7, 365 to give you guys a hand. Let's check the schedule for tomorrow, and then we'll jump into some charts. We heard the FOMC meeting minutes this afternoon, right? And of course, who could forget the petroleum status report this morning at 10:30 a.m. The FOMC meeting minutes pretty much put a bullseye on the month of April for the next rate hike. That means easy money for the equity markets until that happens. We'll see how tomorrow's continued reaction will be to that. Tomorrow morning, pretty much a barren session as far as news goes. Tomorrow, we get the typical jobless claims on Thursday mornings, every Thursday. Now, follow me down bottom here because all the way down here, we got Janet Yellen. They get a big, I guess they're calling it like a town hall or something like that. They got they got Volcker, they got the Bernanke, right? I believe we saw Greenspan on the list. Of course, my gal Yellen's going to be invited there. But it looks like it's a who's who of all of the Fed chair people are going to be speaking tomorrow night. I don't know if I saw it on television. Is it going to be televised? I'm sure C-SPAN will probably have something like that, right? Maybe Twitter will have it. But we do have that tomorrow night. And of course, you can imagine that means on Friday, we'll definitely be hearing more or seeing the reaction, right, to what comes out of. I can't wait to see what Alan Greenspan looks like right now, right? You know what he looked like 20 years ago, right? I can't wait to see. Hopefully it's televised. Something tells me Bernanke has a deep dark tan and has his hair all grown out now because the crap that he went through when he was put into office, right? Boy, oh boy, I would need a couple Mai Tais to recover from that, right? From that period of my life if I was in his shoes. Anyways, you got the schedule for tomorrow. Jobless claims, pretty much the only thing on the schedule for tomorrow. Going to be a pretty easy news day. All right, roll those sleeves up. We get a busy one here for us. Now, we do not see this very often. We don't see this very often. Now, if you turn on the news right now, if you went to any of the major news websites, they're going to tell you that there was a surprising drawdown in inventories, which caused this market to push higher. In last night's newsletter, I'm pretty sure I was specific about last night saying expect a third leg higher. So my math must be off because the chart last night told us you're probably going to get that next leg up, right? Go back and watch last night's newsletter. I'm just calling shenanigans on all of the news headlines, right? All the people who create all these fantasies about why there's some individual cause and effect, right? There is no linear cause and effect to why the markets move. Anybody who tells you it's one news event is lying to you or trying to sell advertising, right, to get you to click, 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 click. All right, so trust the chart. Last night, the proof was in it last night, right? News into that measured move and then expect that third leg up. And here we are, right? Here we are, right where we had anticipated. Again, if the buyers didn't fail, that third leg up. So not a huge surprise. But this is a pretty interesting scenario. Here's what we have going on right now. We have two spiking channels on the chart this evening, which illustrates just how strong this multi-day bullish move has been. The first spiking channel began with yesterday's 4:30 p.m. API report, and the buyers continued the party with the DOE report this morning at 10:30 a.m. Spiking channels tell us to look for buying opportunities at the lows of the channel as well as the pullback to the correction zone. Let's take a moment to think about a spiking channel, and then we're going to talk about what we're actually seeing right now. First of all, a spiking channel, it gets its name because of the spike, the channel, and what we're looking to do on a spiking channel is ultimately buy the low of the channel, okay? You're normally going to get 3 attempts to go higher, right? So 1, 2, 3. The magic number is usually 3 for spiking channels, wedges, triangles, a whole slew of different technical clues. Okay, the first move is the market makers, second move trend followers, third move is the exhaustion move. Usually you can tell an exhaustion move because the candles start getting bigger, right? That's usually how you know you have an exhaustion move. We'll talk more about that stuff, right, with our students here at School of Trade. So the bottom line is the magic number is usually 3, but do not quote me on that, right? Because this is reality. This is not a video game, right? Stuff happens sometimes and we get a fourth leg up. Okay, so the bottom line is we're always looking for a setup at the low of that channel and then the proper entry trigger. So we're not just blindly buying the low of the channel, we're looking for setups. Setups, of course, give us the edge that we need to be able to get into the trade, and the trigger gives us the balance of risk and reward, right? Context, setup, trigger. We don't just trade signals, we trade situations, right? That's the most reliable way to trade. Anyways, so we're looking to buy the low, okay? We want to buy the low of that channel. Now, it's also really important that we mark up this range right here. It's the lowest swing and the base of the channel. This is what we call the correction zone. Many of you who watch my newsletter religiously, I love you guys for it, right? It's called the correction zone. I know most of you know this stuff, but remember, right? Remember when you were a new trader too, you had to learn this the first time too, right? So for all the newbies out there, we're looking to buy the low, right, of the channel, and we're looking to buy the correction, right, back into the zone and then back up. And then this creates, get my drawing tools in gear, this creates, right, a big measured move, right, for a long-term move. Okay? Right? Measured move AB equals CD once we go there. Okay, perfect. Now, remember when it pulls back how the sequence works, right? We pull back into support. Now, this support, of course, could be at the low of the channel, right? It could be at the correction zone. Doesn't matter. Pulls back into support. What are we looking for? That sequence, right? Failure, right? Failure setup, strength setup, pullbacks or continuation setup, right? We don't just buy the setup, we wait for the proper signal candle, right? We want to make sure we get the proper entry trigger. The context is bull spike and channel. setup is, failure, strength, or continuation, and of course, the entry signal is the proper candle. I'll give you the details of my trading plan for all of our advanced members here at School of Trade. Okay, so that's the bottom, that's the fundamental, that's what we're trying to go for, right, for the spiking channel. Now, back to the chart. Here's what happened. This is a pretty interesting scenario. We don't see this very often, but it's in a strong market, it happens, right? It happens. Now, here's what happens. This goes for spiking channels and regular channels. What happened today on Crude was we started off the day inside of a spiking channel. Again, it doesn't matter if it's a regular channel or a spiking channel. It's all the same. It's all a channel. What happened was after the news came out, right? Here's 10:30. News comes out. Bam, right? Breaks up. When it breaks up, it created its own spiking channel, which used the top of the current spiking channel. I told you, it's like seeing a white rhinoceros, right? It doesn't happen very often like this, but news is pretty significant information. Okay, so here's what's happening. The buyers are using the top of that channel. Okay, and this just goes to show you that how really shameless us traders really are. We don't care what we use, right? If it works once, heck, use it again. It worked again, do it again. Keep using it until it fails. Okay? And remember, they're not just blindly, I'm sure some people are blindly buying it, right? But professionals aren't blindly buying it. They're looking for setups, they're looking for the proper signals, and they're always balancing their risk to reward. Okay, so we know the scenario right now. Right now, we have two spiking channels, right? The most recent one came off news. All right, and so of course, recency being most important, we're going to focus on the most recent one. But guys, I'm telling you though, if they don't hold this low here though, you can expect to move right back down to the original channel, and then look at how this will all come together. Right, pay attention here, because you've got the most recent spiking channel, the correction back down. Look for that longer term channel, right, to be a beautiful area for that correction. The bottom line is right now you have to assume that there are some buyers in this market right now that are just sitting here with their feet up on their desks going, this was the easiest money I've made all year, right? And it probably was if you bought that API number, okay, and you got into it early, you had very little heat. We haven't broken any of these swings, right? None of these lows have been taken out. Right? So most traders here are still holding open positions. That's the big reason why you'd expect to see a correction, right? It's the biggest reason why we got to be careful not buying the high and waiting for a correction. Because at this point, we have to assume, and we can safely assume because look at the stinking chart, right? It's been going straight up. We can assume there are buyers still in this market, and how do you attract a bull? The color red, right? A little play on words there. I'm clever, right? I know. How do you attract a bull? Lower prices, right? Price has to come down. Lower prices. Okay, so here's that most recent spiking channel. And you can kind of see this all coming together now, right? Here's that recent spiking channel, right? Rotate up, down, up, down. We definitely still have some more juice. Remember the number, right? 3, 1, 2. So we definitely can keep this party going higher here. But now you can see there's your correction zone right here, right? The lowest pullback, right? The lowest swing at the base of the channel. Okay, so this area right here, there's your spiking channel correction zone, 37.42, 37.25. Okay, price comes back down into it. We're looking for what? Setup failure, strength, continuations, back to the highs. Now, you can also see though, go back a little bit here, right? Here's that move from last night's newsletter, right? That went into a spiking channel, and you can see this is what's going on. The spiking channel rotated up, down, like a good channel should. News comes out, blammo, right? Takes off to the upside, and then now we have that new spiking channel, right? So now you're going to see what I was illustrating earlier. Okay, so as of right now, there's no reason for us not to think that this most recent spiking channel won't keep holding. Okay, we're going to look for proof, but don't be surprised, right? If we see some of these fat and happy buyers, right, take some of their profit. Okay, if we see this rotation lower,